in this world of AI, I'm very well aware of the pitfalls using it, but I'm also well aware of the potential opportunity in AI. And to give you a very concrete example of how I've used AI in my own investment decisions, in the fund that I run, I use AI to pattern recognize backwards in time, meaning that when you look at hundreds or thousands of time series observations, AI is much better than a human individual to pattern recognize the development seen in these time series back in time. A very concrete example is that we try to nowcast the economy, both on inflation, a bit like you do, and we use you as an input, basically. And we nowcast growth, and we nowcast liquidity in markets. But when we transform the nowcasts into actual trading signals, we ask the AI agent to tell us which trades have typically performed the best given these inputs, right? And tell it to use the entire time series history that we are able to provide it with. And very practically speaking, running a fund, even though you hire incredibly qualified portfolio managers, they're not as structured as the AI agent, obviously. They typically get tired from just looking at the same input over and over and over and over. The AI doesn't. So all of the sort of very mechanical decision making that you have around investments in a fund are much better dealt with via AI than via a load of portfolio managers. That's my humble opinion on it, and it actually makes, to some extent, makes the life of an entrepreneur easier because you need a smaller team, given that, right? Fewer chefs to discuss the input. So everything is centered around how you feed the model, rather than whether the input needs to be orchestrated in another way, if you know what I mean. You know, if you prompt the AI in a way that is very mainstream, you'll end up with very mainstream conclusions, which to some extent can be okay. So you need to prompt your AI with an input that is not mainstream and that is not widely known for it to have an edge, in my opinion. So a very concrete example of this, if you ask a large language model to just design a portfolio, it will most likely rest upon public information that is pretty mainstream when it designs the portfolio, and it will therefore give you a portfolio that is very similar to what you see elsewhere. That can be a very, very decent input for many, but if you're running a fund trying to capture alpha trends and trying to capture trends that are uncorrelated to what everyone else does, then you obviously cannot ask an AI agent to just do whatever everyone else does, right? So I think there's a difference between, running a hedge fund that needs to provide an alternative source of returns for its investors and running your own portfolio. If you run your own portfolio, you're probably pretty good off by just asking an AI agent to just create that portfolio, right? Because it will give you something pretty middle of the road. And it will probably be much better than if you ask your bank, which is quite interesting, right? Back to the initial discussion we had, Stefan, around me not being satisfied in the banking system. I think AI will, outpace bank advisors very soon, if not already. And a very simple example, right? If you ask AI to optimize a portfolio and ask it to, just ask ChatGPT, a large language model, and tell it to say, I want to optimize my portfolio and I want to have the highest Sharpe ratio, to the best relationship between returns and risk possible. It will tell you to have a large allocation to Bitcoin. No doubt, because the historical data will tell you that. But you'll not get that answer more or less anywhere in the world if you ask an advisor, right? So there's already a big difference between asking a large language model and a human advisor on these topics.